Hey, what's going on? Just live streaming the end of the market here. Don't have any emergencies going on. Just want to go over what is going on with the market closing today, and then answer any questions that you guys have about markets, the economy, and what's going on. Thank you, Shreya Schwagella 6246. Appreciate you saying that you're a big fan of the work. Couldn't you just go YouTube live with them? I don't know what that means. This is YouTube live. So is something different about your hair? Uh, you mean my lack of hair? Nothing's different about my lack of hair. Still not there. Obviously, I'm in a different location than I normally am. You guys see over there, that is the uh, that's my regular setup where I do my like actual recording from. That's my camera and lights and everything like that. So here I'm just at my computer, just live streaming. Why do you limit spaces on your calls? Um, are you GNGR? You're talking about when you say limit spaces on your calls, are you talking about right here, right now, being live? Because if I did limit this somehow, I didn't mean to. I normally don't go live. Um, are you talking about right here? Or are you talking about when I do do my like events, like my webinars where I'm doing like a training or a teaching about something? Um, if that's what you're talking about, the reason I limit the space is because the events. Okay, yeah, that's what you're talking about. The reason why I limit the space is because I want to be able to have the like chats and the questions and everything be like manageable. If there's literally 1,000 people, 2,000 people on it, it's like most people won't be able to get everything that they can get out of it. So that's the main reason. Also, um, it's because typically at the end of it, I'm going to be selling something, and there's actual limited space, like for real in that, because onboarding, bringing in new clients into my programs means that I don't have the capacity to onboard too many at the same time. So I just want to make sure that everybody has a good experience. So that's why. Yes. So I did trim my beard a little bit shorter than I normally do. It was an accident. I've got a new trimmer, and I was using the one guard, and it's not a true one. It was like more of like a zero. So that's probably why I look different here, other than the different in the camera angle. All right, let me see. I'm trying to catch all the questions here. Yeah, different light. Strong words on the government in your video today. Yeah, and by the way, that video is performing terribly. So it's funny because the libertarians or anarcho-capitalists have the privilege of being hated by both the left and the right, because both the left and the right like big government. They like small government. They like small government in the things they don't care about and they want the government to stay out of. They like big government in the things that they want the government to make sure they're doing. And so both sides are, two sides of the same coin. They want, big, strong government in the areas that they actually care about. And so the anarchist or the libertarian has the privilege of being hated by hated by both. um, should I sell my gold before it goes down? So gold, this is a good one. So there's if you guys have heard about the taxi driver test or the dentist test, it's an indicator of like when an asset becomes mainstream, by the time like your dentist or your taxi driver or your Uber driver is telling you to invest in something, or that they are investing in something. It's because the price appreciation has gathered so much attention that it has basically saturated the market. And by the time they hear about it and then get convinced to do something about it, it's like, okay, that's an indicator of it being the top. So in my life, that person or those people, they're my in-laws. And so if you look at the time frame, I have the time stamps of it's just insane. So in July of 20 or August of 2020, which go pull up while I'm saying this, if you have on your phone or whatever, pull up a chart of gold. August of 2020, my in-laws texted me, and I had been telling them, by the way, to buy gold for uh at least a year and a half, maybe 2 years by this point. August of 2020, they texted me. They said, "All right, help us get started buying gold." That was literally the top. Like gold had been on a big 50% run. Like it literally marked the top of gold when they started buying. They continued to buy until October of 2022. They texted me and said, "We want to stop buying now because gold is just falling." And it had been. It went all the way from, $2,000 an ounce down to like $1,600 an ounce. And they stopped buying at that point. And so they had averaged their costs down, which was good because they had been buying while it had been moving sideways and dropping. And I didn't know this actually. I just found out recently in March of 2020, they needed to pay for a real estate thing they were doing. And so they actually sold their gold in March of 2024, which was literally when the breakout started. They sold it at like 2000. So they walked away with a little bit of a gain because their average cost was probably like 1800 or something. So they did walk away with a little bit of a gain, but they sold their gold to do this purchase that they needed to make. And then guess what? Literally on October 8th, they texted me again and said, "Hey, we'd like to start buying gold again." And so I tweeted at the time and I was like, "Man, like this is the perfect indicator." I was like, "Guys, you should, maybe some profit taking time here." Um, because this is an indicator of a top. But I say that because it's like, all right, like you can gauge sentiment and euphoria and fear in the markets and use that to do trading. I don't use gold that way though. So I do I should clarify. Gold, I think, is your savings account. So you should look at gold as, hey, I'm going to have 20% of my money in gold, and that's just to preserve my purchasing power. And if there are deals on assets, I will use that if I need to, survive because I get laid off or whatever. Like that's a savings account that will actually preserve your purchasing power. I don't trade that. I don't sell that. I just maintain kind of close to that percentage for my overall portfolio. But that doesn't mean you can't also trade around gold separately than that, and which I do. And so sometimes I'm doing options on GLD. Sometimes I'm, buying and selling GLD. Sometimes I'm doing options on gold miners and that kind of thing. Those are like separate trades, and I don't consider that like me buying or selling gold for like my savings account. So those are just two separate buckets. And so that's the way that I look at gold right now. That like it doesn't the price change doesn't do anything to my long-term holdings of gold, but it does for sure to my trading account. All right, let me see. Let me see if there's some good questions here. Let's see. BYND. So Beyond Meat, yeah. It's by the way, what is it at right now? BYND. Geez. Okay, so this is crazy. If you guys have the ability to pull up, I wonder if I can screen share. Sorry for everybody. This is like I literally never live stream. So this wondering if I can no, okay. Well, maybe if I click allow. Hope it doesn't end the stream. I think it's gonna make me restart this. All right, I'll do this. I'll figure it out for next time. BYND. It's just a terrible company. Look at the chart long term. And this is not the chart you want to see if you're like, oh, I'm gonna accumulate some shares of a stock. You don't want to see something that just continues to go down and down and down and down. But they bottomed at like 50 cents a couple of days ago. And as of right now, they're at like $3.40. Today, they were all the way up to like $7.68. And so they've had this massive pop, but they've also dropped a lot just today from the top. So I don't know exactly. I haven't looked at the story. I haven't looked exactly what's going on with Beyond Meat. But the one thing I will say is, number one, I never invest in companies that I despise. And that could be a couple of different things. Like number one, maybe I despise like the overall messaging and product and target and like goals for the company. It's like, if that's the case, no matter what, I'm never going to touch that company. And I think Beyond Meat is like one of the most anti-nature, anti-human, like just consider for the fact that what they're doing, their whole mission is to be able to like try and take um use machines to take plants and chemicals and energy and combine that into something that is a quality source of protein that humans can eat. That's literally what animals are. Animals take energy and take plants and take chemicals, and they convert it into high quality protein that humans can absorb and eat. so so I don't like the you guys know that for like a little over a year I was like a pure carnivore. I'm not a pure carnivore anymore. I'm more paleo, hunter gatherer type of diet, um but I don't think that there's much long-term growth potential for something like Beyond Meat. No, that has nothing to do with the fundamentals or anything like that, but I'm not a big fan of Beyond Meat. All right. Still doing carnivore, looking pretty fit. Thank you. No, not doing carnivore anymore. Purely, I'm probably mostly like most of my calories do come from meat. Um, but I eat fruits and vegetables and rice and potatoes now as well. Part of the reason was because I started getting really cold and I couldn't like get warm or stay warm without any carbs. The first year when I lost like 50 pounds, like I didn't care because I was getting healthier. But once I hit my target weight, I was like, there's not really that much benefit anymore. And plus, I started lifting weights pretty heavy every single day, and I just didn't have a lot of energy in the gym. So adding in, fruits and vegetables and stuff really helped with that. Um, and uh, and that's like a big hobby of mine now. All right. If 10-year rates fall and mortgage rates get back to 3 to 4%, will real estate prices go up or down? Could induce supply into the market? No, it will absolutely induce supply into the market, because the reason why there are no transactions happening right now is because nobody can afford to sell. Because anybody right now who bought prior to 2023 cannot afford to leave their house. They cannot afford to go rent because they'll pay more. They cannot afford to sell and move into even a smaller house. They'll pay more. And so lower mortgage rates will absolutely bring more supply into the market. But at the same time, that also means that every single one of those people is also a buyer. And so the supply, buyers and sellers, that none of that is as important as the number of housing units compared to the people who need a place to live. By and large, nationwide, there is a housing shortage. The only thing that could change that is a huge wipeout in a percentage of the population, either through death or deportation. And deportations, even though they're at record paces right now, I think we're at like 500,000 year to date, nowhere even close to nearly enough to make a dent, especially on single family housing, because most immigration, especially the people who are getting deported, are living in apartment buildings, not single family homes. All right, let's see here. Can you explain the relationship between the Fed funds rate, the inflation rate, the 10-year bond yield rate? Are they connected to each other? What's your opinion? They're connected, but they're not like uh they're not like attached at the hip. So there's influence, but it's not 100%. So the Fed funds rate is just the rate that banks pay to each other or receive from each other overnight when they swap cash and collateral back and forth between each other. The Fed makes sure that rate stays between their target range by also playing in that market, so that if there's not enough cash or collateral, then they come in and make sure they maintain that rate. And mostly they do that through banks keeping reserves at the Federal Reserve. So the Fed pays the interest on overnight reserve balances to banks in order to make sure that there's that interest being paid to them. That's the overnight rate. And so that has a lot less influence on long-term rates like 10-year treasuries or mortgage rates, things like that. But it has a lot more influence on things like T-bills. And so when it's really easy and risk-free for banks to get a high interest rate on short-term cash, then that's what they're going to do. If if that becomes close to zero, let's say, well, then banks need to go do something else with all that money. So it does influence other yields down the curve by pushing that money out into other areas. And so in order to achieve yield, that those loans have to be made to the US government longer term or to mortgages or other things like that. And so that additional supply for lending for the other things pushes those yields down. I think that the long term that we're looking at here, 3, 5, 10 years, is the debt monetization that's going to happen in order to finance the government spending means that the government is going to be getting lower rates. But all of that additional money supply is going to bid up goods and prices, the prices of goods and services, which means that all of the goods and services and asset prices, interest rates for more free market interest rates, things that are not directly controlled by the government, all of those things are going to go up. So like credit cards and auto loans and mortgages and stuff. So I think we have a brief period of time where we'll get that, the lower interest rates, throughout the economy. I don't think it's going to last though. All right, let me see. Another good question. Did you talk about how gold topped against Bitcoin and that gold is overvalued against Bitcoin more than the 2022 bottom when Bitcoin was 16,000? I did not talk about that. And I don't really like comparing the two. The reason is because gold was money for thousands of years. And when I say was money, I mean it was used as money. And I know people like to argue semantics about like, oh, gold is money, everything else is credit. It's like, oh, yeah, that's the one thing that you're going to say that JP Morgan was right about, and everything else everybody hates him for. It's like, okay. I use modern language. And so money is what people use as money. Today, people use the dollar as money. So gold was money for thousands of years. It is still used as a store of value by, as a monetary store of value by many, many, many people, institutions, sovereign wealth funds, and mostly central banks. Bitcoin may displace that. Mostly Bitcoin is not held by central banks and institutions right now. It's held by individuals. And even the institutional adoption is like, a lot of it is like people selling their Bitcoin to buy it through ETFs because it's just easier to track and you don't have to worry about getting audited in 6 years because you were trading Bitcoin through, some different apps, and you can't go back and find what your overall cost and profits were long term and short term. And so a lot of people are just moving over to ETFs instead. But it's still a lot of that is individual. And the market caps are completely different. It's like it's possible and maybe even likely that Bitcoin does become displace gold in terms of its market cap, its use as store of value by central banks and institutions, and become used as money universally. But it's not there yet. And so I don't like comparing the like Bitcoin topped against gold or gold topped against Bitcoin. It's like, just own both. And if Bitcoin becomes money, you win. If not, make sure your position is small enough where if it goes to zero, you also win because you've got gold, you've got other investments as well. Are you covering Tesla? I'm not covering Tesla. This is just a market close live stream, and just an ask me anything type of live stream. I'm not covering Tesla. I am long Tesla. I like Tesla for the long term. I think it's incredibly overvalued right now. I did not buy it at this current price, but I think I am very bullish on it for the long term if they can pull off what they're trying to pull off. Who knows whether that's going to show up in the earnings report today, but we'll see. What do I think about Peter Schiff's opinion on Bitcoin? There are a couple people who I really respect in the gold world. Peter Schiff is one of them. In terms of their like ability to articulate economics and law and politics and the things that they believe and say are correct and true. But it's weird because a lot of them, I think, have a blind spot to Bitcoin. In other words, like when you look at the arguments that many of these people use against Bitcoin, it's like number one, many of them are just flawed arguments that have been disproven. Number two, if they're not, it's like that same exact argument can also be used against gold. Like one of them is the volatility piece. And it's like volatility is a spectrum. It's not binary. It's not like one thing is volatile and another thing is not volatile. In the short term, gold is volatile. Bitcoin is more volatile, but you can't use that as an argument against something being able to be used as money, um, especially because larger market caps and institutional and sovereign adoption displaces volatility, or it decreases volatility. Um, and so you can't use that as an argument against Bitcoin's future use as money when the same thing to a smaller degree also applies to gold. And I think there are a lot of not hypocritical arguments, but um, uh, either straw man arguments that people like Peter Schiff make against Bitcoin, uh, or just arguments that also work against gold. Now, to his credit, he does say if there are ever salaries or debt that are denominated and priced in Bitcoin, then that changes things, because that means it's gotten to a place where it's actually started to be used as money, and I agree with that. So that's what I think about Peter Schiff's opinions on Bitcoin. All right, let's see here. Questions. Doesn't a target rate of 2% inflation encourage investment and productive use of capital? Yes, it does encourage it. But here's the thing about interest rates. Interest rates are a signal. Interest rates are the cost of capital, which means that they are a signal to economic actors about whether money is abundant or cheap, whether the savings pool is full or depleted. And so when you have interest rates being controlled, by definition, it means that the signal or information being sent to economic actors about whether money is scarce or abundant is false by definition. So yes, lower rates encourages the productive use of capital, which is something that should only be done when money is abundant, when the savings pool is large. You shouldn't artificially manipulate that. Otherwise, you are draining the savings pool to a greater extent than you should. So does it produce that? Yes, but it also then creates a bunch of profit opportunities for uh, zombie companies, things that drain real wealth. And so this is like you guys remember, years ago, cities were full of those scooters from every brand that were like you log in with the app. Those scooters still exist, but it's like there were a couple years there where it was just like they were littered everywhere. And it's like that's because of a ZERP environment that encourages the wasting of capital, because the signal that investors and capital allocators are getting is spend, 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 no matter what. And the true savings pool is actually not that large, and so it drains. It's a net drain on real wealth, but it does have the effect of artificially inducing some deflation in places because it makes things a lot cheaper than they would be otherwise. All right, let's see here. Opinion on the concept of concentration is growth and diversification is only for protecting wealth. If you had a guess for the golden ratio of diversifying assets, why would that be? All right. So yes, in general, building wealth is more effective when your wealth is concentrated, and then diversification protects against it. The problem that you face here is control. And so when you concentrate into an asset that you can't control, it greatly increases your risk. And so if you are all in on Amazon, you're all in on Bitcoin, you're all in on Tesla, you're all in on Google, you're all in on any of these individual stocks, you can't control that. And so typically the people who advocate for this are people who began their careers concentrating their wealth into a business that they actually could control, whether it was real estate that they were picking the actual houses and they were buying and fixing and rehabbing and selling or putting renters in it or whatever. It's like there's a lot of wealth concentrated in that. And or maybe it's somebody who started their own business. It's like most of my wealth for a long time was concentrated in me just starting this business. And that as long as you have control and as long as you iterate and look at the feedback and change what needs to be changed and adapt, there is a very, very, very high likelihood that that is going to produce the absolute most wealth for you that you could possibly create compared to anything else. The problem is when you can't control it. And if you can't control, then I say diversify, because you're still going to be able to build wealth through diversification. It's just not going to be, the types of returns that you can get on something that you can control. And so diversification is a hedge against risk in that way. And you shouldn't concentrate unless you can control. If you can control, concentrate, build wealth, and then start to diversify once you've built the wealth. All right, let's see. Questions. It's a power move to buy gold if you're bald. Power move to buy gold no matter what, even if you have hair. Let's see. Um, questions. How can we spot new potential opportunities like BYND before they temporarily moon? I would not try and spot opportunities like BYND before they potentially moon. Um, there are things that are only noble to insiders. And it's just even like tracking like politicians' trades. It's like by the time that information is public, they've had months before they've reported it, and there's no penalties for them for reporting late. Even if they're like, oh, 6 months late, it's like, what's going to happen? Nothing's going to happen. So by the time that the insiders have already made their moves, it's potentially a lot of move has already happened. So my preferred way, instead of trying to find those kind of things, is looking for mispricings in the market. One example of this is an example I've talked about a lot, but it's just it's really easy to understand, and it's got a good track record. So MicroStrategy, back in this was December of 23, January 24. Um, let me give you the exact date because I tweeted about it when I made the move. But in February of 2024, I was looking at MicroStrategy and I was like, okay, look at all their Bitcoin, look at MicroStrategy's market cap. They're trading at book value, which means if MicroStrategy shuts down today, sells their Bitcoin, their share prices, like you get all of your money back, like even if they shut down today. Plus, they have a business. And also, Bitcoin is going up from here. And also, there's a massive short interest on MicroStrategy shares. So I went in hard on MicroStrategy. Um, so that's a mispricing in the market. Those things are hard to find. It means you have to do a lot of research and you have to sift through a lot of hay before you find the needle, through a lot of garbage before you find the gold. But looking for areas in the market where they're mispriced. There's misallocation. There's way more shorts or way more longs or way more leverage or something where you can look at this and say, okay, well, I might be wrong about this, but from everything I can find, it looks like my worst case scenario is very, very, very limited here. And if everything happens the way that I think it's going to happen, it's going to it's going to be very good. And so everything in life, but especially in investing, is about asymmetric returns. Everything, asymmetric risk everywhere. So you want to make sure that you're looking at two things: what is the best case scenario, but most importantly, what is the worst case scenario? Never look at your stop price because it can gap down past that. Never look at say, actually, in reality, what is the worst thing that could actually happen here? In MicroStrategy case, it was like it goes bankrupt tomorrow and shuts down. It's like, okay, well then I get my I get my money back. So that was a very low risk. There was very low margin of risk built into that trade. Um, and so I like to look for opportunities like that. And I know it's hard and it's, maybe not the answer that you were looking for, but moves like that always look uh clear in hindsight, but they exist because in the moment everybody thought Bitcoin was going to crash. And if Bitcoin did crash from there, then that trade would have not been a good trade, because then all the shorts would have been right. And so it was, there's reason for those opportunities being in the market. It's because the clear consensus at the time looks like it should be correct. Um, Tan, man, Ninja. The lighting here that I have set up is something that you could replicate if you don't want to have that pasty white skin anymore. You can just manipulate the color of your lights, and you can look more tan than you really are. All right, let's see here. Enjoy your flight. All right, next question. Can you give one opportunity to take right now? Can you give one opportunity to take right now? I'll comment on the market overall right now. So the market right now is, I know this is going to sound crazy. The market right now, I think, has a lot of upside room ahead of it. And I obviously I could be completely wrong about this. And I like having at least some short-term hedges in place just in case, for like if there's a big flush out from here and support breaks down and the bottom falls out. but there's a lot of fear in the market right now. And usually what happens after a big dip when you hit extreme fear is you get a big rally, especially government shutdowns stopping and printing and interest rates dropping and things. It's like, I know that everything looks super overvalued right now. And that's why I think we have a lot of room higher to go from here, even over the short term. I'm talking the next couple of months, and obviously, when it's appropriate, I'm playing both sides of the market, because if it does drop from here, I've got some short term puts that I can close out, and I can use that to buy some more longer term, long positions. But it just seems that the sentiment is so fearful and bearish on the market right now that it looks like the contrarian play is actually is actually bullish. We'll see though. We'll see over the next couple of weeks how that opinion pans out. All right, let's see here. What would you recommend for someone to learn the basics of the macro economy? Well, number one, read books. And so when I was a stockbroker, I just fell in love with macroeconomics. Initially when I was just getting my licenses, and I was like, man, this stuff is super interesting. So, I, met as many people as I could, talked to as many people as I could that were the smartest people I could find, and try to figure out, okay, what is how does this stuff work? And, what does this mean? And, so I was in a little bit of a circle where I had access to some of those resources, but very quickly I found out that even in that world, most people, at least back then, didn't know how any of this stuff worked. You don't care about that. You only care about bringing assets in the door and putting people in, some basic managed accounts that have some index funds. And it's just like the vast majority of that world is just not into the things that I think they should be into. I think it's maybe different now. Ever since 2020, it's like everybody is interested in macro and the Fed and interest rates and inflation and all that. But at least back then it wasn't like this. So I had to just start reading. And so I just, you start somewhere, and then that leads you down a path. And so I read books from like, Peter Schiff and Jim Rickards and some of these people that you guys know about at first, and learned a lot. And, Ray Dalio's got some good books on this, on macro, like his big, what's it called? Principles of Big Economic Crises. I think that's the name of that book. Anyway, he's got a couple of books. That one was a good one. What are some other good books on macro in the way? Oh, Seyfedina Moose's books. There's very few authors who I've read like all of their books, because most books are terrible. You got to read through a lot of books before you find a good book. And then once you find a good book, those good books are rare. And then you go on to the next book from that author, and it's like, oh man, that one sucks too. And so it's like, not only are good books rare, but like good authors who all of their own books are really great. Like those are even rarer. And I think Seyfedina Moose counts in that category. And all of his books, even if you don't like Bitcoin at all, his explanation of how the economy works is just fantastic. So all of his books are great. The Fiat Standard, the Bitcoin Standard, I think Fiat Food is one of them. I can't remember the exact name, but I think it's Fiat Food. And then he's coming out with a new one called, I think it's called the Gold Standard, and it's like a part fiction book of like, what if we would have been on a real gold standard in like 1913, instead of moving to, with the Federal Reserve and stuff. So I'm excited for that one. Obviously it's not out yet, but that one could be a really fun book. All right. Could you help clarify why so many people expected a recession over the past few years, why it hasn't happened yet, and what might happen next? Well, thank you for I think it's called a super chat. Correct me if I'm wrong about that. The question there that you put in there with the $5. Appreciate it. Yes. So number one, nobody was expecting a recession. Like, when I say nobody, I mean the vast majority of people were not expecting a recession in, let's say, 2006, 2007. And for years, 2013, 2014, especially like 2016 and 2017, so many people were expecting a recession. I knew people, very smart people, who in 2016, maybe 2017, they were like, I bought my house for 200,000. Right now it's worth 300,000. This is another bubble. I'm selling, I'm renting, and I'm going to buy after everything crashes. It's like, that was the wrong time to sell. And there are many, especially millennials, actually, people who got caught on the wrong side of that, expecting another crash, renting, and now maybe will be priced out of ever owning a home. Um, and so the short answer is recessions and crashes don't happen when everybody's expecting them. They happen when almost nobody is expecting them. They happen as a result of, it's a credit cycle. It's not a business cycle. So when you get an expansion of credit, that bids up the money supply, prices go up, assets, goods, services, and then the inevitable result of that is a contraction. Um, Contraction of the money supply that leads to a contraction of the economy. And the cycle is because that debt has to get repaid, and once that money starts getting spent, interest rates go up to compensate for the rising prices. And so the way to stop that from happening is to stop the money supply from contracting. And so in 2019, we were headed down that cliff. Like, I don't know if you remember, not QE, when the Fed started bailing out the repo market. Um, that was the start. There was no liquidity left in the system. If the Fed wouldn't have intervened, banks would have fallen over. There was, the economy was tapped out. It would have happened then. And they prevented the contraction of the money supply by coming in there and printing money to undo or offset all the contraction. And then it still wasn't enough, which they were very thankful that 2020 came around. And I don't say the word about the thing that happened in 2020 because people who say that word, even still, sometimes have issues on online. Um, and so then 2020 came around and they had a perfect excuse to completely undo and not only undo all the potential contraction that was built up in the system, but go even past that. There was a recession in 2022. It was light, but it was as a result of the contraction that happened after the expansion of 2020 and 2021. And that's another reason why I think that most people don't say there was a recession, but it was 2 consecutive quarters of contracting GDP. The money supply fell, interest rates increased. It was like that. It was a recession. It was a light recession, but it was a recession. And that's another reason why I just don't think that we are currently set up for that. You tend to see the big heavy recessions hit right when there's starting to be a ton of euphoria and everybody's making a ton of money and people are hopping from job to job making more and more money every single time, and people are quitting because they're day trading from home, and um, it comes on the back of euphoria after the big expansion. And we definitely have not seen a big expansion yet. We're just now moving into easing territory, and there's a lot of easing ahead of us. All right. Well, this was the market close live stream. Let me know right now in the chat, guys. Uh, if you guys want me to continue to do more of these in the future. Timing wise, market closing is probably when this will work out if I end up doing more of this. But if you want me to continue doing more live streams like this, you can obviously ask me anything. We can talk about stocks that are moving, gold, Bitcoin, the market, the economy, whatever. And if you guys like it, then I'll continue to do more of it. All right. Thanks for watching. We'll see you guys next time.